The Property Bulletin by London Property, the home of superprime.
Research highlights that a significant majority of UK-linked high net worth individuals, about 3 in 5, plan to increase their real estate investments in the next year. However, it's emphasised that any new government must address challenges in the residential housing sector to attract this funding. Key concerns include higher interest rates, political changes, increased regulation and tax adjustments. Specific real estate sectors expected to perform well include life sciences, warehouses and logistics, and co-living, while interest in retail sector investments is lower. Respondents urge the government to focus on alleviating restrictions on conversions in brownfield sites, revising zoning and land use policies, and incentivising affordable housing to stimulate investment. Overall, the sentiment is positive towards real estate debt as an asset class, contingent on governmental efforts to address market constraints and enhance investment conditions. In a significant legal victory, an individual has successfully overturned a demand from HMRC regarding disputed stamp duty land tax (SDLT) payments. The appeal, heard at the first-tier tribunal, resulted in a favourable ruling for the appellant, who argued that the property in question was uninhabitable. This successful appeal led to a substantial saving of £168,000 in SDLT. Central to the appeal was the presentation of clear and compelling evidence demonstrating the property's unsuitability for occupation due to a multitude of serious defects and hazards. These included severe damp issues throughout the property, extensive water damage that had compromised internal walls, missing safety features like banisters and stair rods, faulty electrical wiring requiring replacement, toxic mould in several areas, and significant structural concerns necessitating temporary support with acroprops. Furthermore, asbestos was found in multiple locations within the property, with varying levels of hazard, including one instance rated at the highest level of concern. These hazardous conditions were underscored by the property's appraisal report, which explicitly stated it was not fit for habitation or letting due to numerous health and safety risks. The homeowner was represented in this appeal by Cornerstone, a respected tax advisory firm led by David Hanna. Notably, Hanna himself had previously faced legal scrutiny over tax matters related to property transactions. In a separate case, he was ordered to repay £30,600 in SDLT plus additional penalties, after being found to have engaged in a tax-saving scheme involving non-disclosure of property value to HMRC. The recent tribunal decision highlights the complexities involved in SDLT disputes and the importance of substantial evidence in supporting claims of property uninhabitability. It also underscores the role of expert representation in navigating such legal challenges successfully. In a contentious legal battle, Italian businessman Raffaele Mincione has vehemently denied allegations of fraud regarding the valuation of a London property sold to the Vatican. The High Court proceedings reveal Mincione's assertion that he acted in good faith during negotiations with the Holy See's Secretariat of State over the former Harrods Depository at 60 Sloane Avenue in Chelsea. The Vatican has accused Mincione of inflating the property's value, asserting that his valuation of £275 million was misleading and contrary to their interests. However, Mincione's legal counsel, Charles Samek KC, has attempted to refute these claims, arguing that there was no misrepresentation during the transaction and labelling the Vatican's accusations as baseless and unsupported. The dispute centres on the discrepancy between the valuation provided by Mincione and the subsequent sale price of only £180 million by the Vatican in 2022. This was £95 million below the alleged market value provided by Mincione. The trial, presided over by Mr. Justice Robin Knowles, is expected to span 4 weeks, with a written judgment to follow. The outcome will determine whether Mincione's actions were lawful or if there was indeed fraudulent misrepresentation in the sale of the property. Developers are increasingly focusing on middle-aged renters, whose experiences highlight the challenges of navigating London's rental market. Renters in their 40s may have spent decades moving between rental properties due to landlords frequently selling. A growing number of older renters are forced to share homes with others. They are unable to afford homes amid soaring property prices. This demographic shift has sparked interest in the build-to-rent sector, which aims to provide more stable housing options for tenants over 35. Companies such as Grainger and Greystar offer longer-term leases and tailored amenities designed to cater to the needs of older tenants seeking security and community in their housing arrangements. The sector's appeal is underscored by substantial investment, with £4.5 billion directed towards build-to-rent developments last year alone. Corporate giants like Blackstone have made significant acquisitions, underscoring investor confidence amidst broader economic uncertainties. Despite its rapid growth, challenges persist. The sector remains a small fraction of the overall rental market, and developers face hurdles such as planning constraints and site availability. Moreover, the absence of robust legal protections leaves renters vulnerable to sudden rent increases and evictions, exacerbating housing insecurity. Housing advocates and campaigners argue for urgent legislative reforms to address these issues and ensure affordable, stable housing options for renters nationwide. The debate underscores broader societal concerns about housing affordability and tenant rights, shaping policy discussions as the UK grapples with housing market dynamics amidst political transitions. As the UK heads into a general election, the housing policies put forth by each major party will significantly impact both renters and buy-to-let landlords, two crucial segments of the electorate. Renters constitute a substantial portion of voters, particularly in England, where 19% reside in private rented accommodation. Issues such as inflation and housing shortages have driven rents higher, prompting politicians to address tenant concerns prominently in their campaigns. Labour, for instance, aims to abolish no-fault evictions and empower tenants to challenge unjustified rent hikes, mirroring pledges from the Liberal Democrats and the Green Party to enhance rental standards and energy efficiency. In contrast, the Conservatives propose strengthening eviction grounds for landlords, dealing with antisocial behaviour and offering temporary capital gains tax relief to landlords selling to tenants. Reform UK advocates for reinstating landlords' finance cost deductions, appealing to traditional Conservative supporters. For buy-to-let landlords, navigating these policies is crucial. They face tighter regulations and financial pressures, exacerbated by recent tax changes and fluctuating property prices. The election outcomes could further influence their operational landscape, especially regarding taxation and regulatory frameworks. Amidst these considerations, first-time buyers and landlords alike seek financial strategies like 95% mortgages or incorporating properties into business structures. Each option carries implications for profitability and compliance with evolving regulatory environments. As the election nears, the choices made by voters will shape the future housing market dynamics, determining the balance of rights and responsibilities between tenants and landlords and impacting the broader economic landscape.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the superprime property market.